Hey, everybody, welcome to another episode of the Solar Sales Podcast with your hosts, Tyler Jack and John Maxey. The Solar Sales Podcast is a back to basics show focused on new people entering the solar industry and is a safe place to turn for people that want continued education. We keep it fairly anonymous and we aren't here to inflate any one person or company. This is a raw and unfiltered perspective free from recruiting. If you're listening to us because a friend sent you our link for Apple Podcasts, Spotify, YouTube, or another platform, this podcast was designed with you in mind. Trust me, you are in the right place. Don't forget to like, share, and subscribe to our channel for updates. We are releasing a show once a week.
Yes, we are back. Now, Tyler, a lot of people think the solar tax credit's disappearing. And if they didn't get it installed in 2025, they missed the opportunity.
They
Is
did.
that true?
Yeah, unfortunately, they missed the opportunity.
So no more 30%?
No 30% for the residential tax credit, as far as I know. But I think you're about to tell me about a couple things that we've been discussing that might be some other options.
Right, and that's, I think, what's causing a lot of the confusion. You're starting to see a lot of people marketing alternative tax strategies, utilizing specialists, right, that know the solar tax code. And so you'll hear things like the ITC is not going away, and it's partially true.
Yeah.
As you know, the commercial ITC credit doesn't expire this year.
Yeah, that's why TPO stuff is so popular right now.
Correct. And there's a lot of firms trying to be creative with how they structure those TPOs. And then there's some tax firms that are showing homeowners to just become the commercial version themselves.
Like the snake oil salesman, right?
No, not necessarily the snake oil
Oh.
salesman, right?
Never mind.
These are more above board strategies,
Oh, okay.
right? It's easy to kind of put it in that bucket. A lot of people think it's too good to be true. It is, right? But if it's structured correctly, you can make your residential purchase a commercial project and take advantage of those same credits that have not expired.
Yep.
And it's not just the ITC credits. This opens up depreciation, right? The domestic content. What's the other 10% for
Energy communities.
energy communities?
Yep.
So all those things that these TPOs are taking advantage of, there's firms out there that can help the homeowner do the same.
Yep.
Okay. So I think that's one of the topics that we'll go over today, kind of just how that works, what exactly they're doing, and then, you know, hopefully it can digest for those sales reps out there, people out there trying to figure this stuff out. Okay.
Not gonna lie, John, there's a lot of funky terms going on.
So to keep it basic, the thing that you want to start with is one of the things that happens with every solar project in the country. They fill out a document called an interconnection agreement.
Yep.
This business agreement is held between the homeowner and
Utility company.
utility company.
Yeah.
And if
Business
you go,
agreement, he says.
yes, it is.
Yeah.
It's a business agreement. Right?
Yeah,
And
yeah.
if you look throughout the country at the different utilities, some of them will, guess what, they'll make you fill out a W-9.
Really?
Now, why would you have to fill out a W-9?
They're gonna pay you back.
Because if you make too much credits and it ends up in a check, does the utility company want to expense that out?
Yeah, absolutely.
And they expense it out as income.
An expense.
It's
yeah,
an
to
expense
them,
or
but-
income to whoever they had that agreement with, because they, you know, they basically, it's a bartering agreement that we're gonna collect the energy, give you credits, and if those credits out are more than what you spent, it ends up being a check at the end of the year.
Yeah.
Okay, we've
I've gotten
seen some
some.
checks like that, right?
I've gotten some,
You've
yeah.
gotten some. So that's the basis for it, right? And, you know, once you establish that my intentions with this solar system was to generate income, well, then I have every right to depreciate the asset that creates the income.
I see. Okay. Yeah.
I also no longer can file a residential ITC credit for it because it's a commercial project. Which
Okay,
means
so
I-
because it's depreciated and because there's this interconnection agreement that I have a W-9 filled out for, it's an income producing asset, therefore I can depreciate it and it would qualify for commercial tax credit.
as well as the domestic content.
Okay, so if I'm using qualified materials.
Right.
Okay,
And then if you're in a certain community, there's a map that you can look at. We'll give you an additional 10% for those communities that, I forget the name of the board that creates those communities, but that's
it's the Department of Energy.
Department of Energy, yeah. So
Yeah.
they have a map saying these are areas that are deemed an extra special tax benefit.
Those are MSA and non-MSA stuff, right? So it's the what is it? Near a coal plant closure,
Right.
and they have to have a high enough unemployment rate.
Correct. Now, you understand depreciation
Yeah.
for the basics of it. So when you look at a solar project, let's say it's a $100,000 solar project, and I have my interconnection agreement with the utility, and I've done all the proper paperwork for that. I go ahead and depreciate it on top of the 30%. My return on that, right, the percentage I get back is going to be based on my income.
Mm-hmm.
The more money I make, the higher my tax bracket is.
Yeah.
Right?
More
And therefore, the better the benefit is. So this caps out at about 30% as well in depreciation.
For the cost of the solar system, or the
Right.
battery system, whatever.
Right. As far as like what you're getting back.
Yeah.
So it ends up netting at about 30% on the higher incomes.
Mm-hmm.
So you're talking 60% of the project just with the ITC and depreciation. You add another 10% for domestic content, we're at 70%. And if you happen to be in one of those community areas, they're at 80% project, right?
Yeah.
So this is what has always made commercial solar so attractive.
Right.
And it's now available through these partners for your average residential customer.
I feel like we're finding out about this late in the game because this has been the case for a long time, right? Because it worked for commercial properties, right? Why wouldn't it have worked for residential stuff back then?
Most of the firms that are doing this have been doing it for 4 or 5 years.
Okay.
Okay.
And I feel like people are just now figuring out about it.
Yeah, it's because people go with what's easy, and so for a long period of time, most of the organizations out there, most of the sales orgs, most of the installers just went with the regular, easy residential, 30% or a lease,
Yeah.
because they didn't have to go look for other options.
Yeah.
With the tightening up of the tax credit and the residential one, these became a lot more popular. So you're seeing a lot more marketing of this out there in the community, right? And there's different forms of the same thing, but this is basically what it is.
Mm-hmm.
Now, I've heard of some other ways that companies are trying to take advantage of that same thing by creating, what is it called, like what's the word, a synthetic cash.
Yeah.
So it's
The
kind of
monopoly
like a
money.
lease or whatever.
Yeah.
How does that work?
It's funky, but it essentially will follow a lot of the same premise of what you just talked about. Because these are becoming more and more popular now that it's 2026,
Right.
and people don't have this residential option anymore. So I think the loan companies are starting to pop on some of that and say, let's pair up with somebody or have an affiliate
Right.
for like this third-party financier.
Mhm.
So there's a
And
lot
that's
of
not
names
snake
for it.
oil.
Yeah, right.
I mean, if it passes all the parameters that it needs to, then you're going to see these banks partner up with them. So we know it's real.
Mhm.
It's just another version of what we just explained.
Mhm.
But that version seems like it benefits the third party owner more than the actual customer.
Have you ever heard of a collateralized debt obligation,
I have.
a CDO? Where's that from?
Is it from?
It's from the mortgage industry.
Oh yeah. Well, okay.
That's when
So-
everybody in 08, when they were
Right.
doing all
They
that
all.
stuff.
Yeah.
Yeah.
And things got really bad fast.
These derivatives,
Right.
popping on that. Now, this is a little different. Obviously, it's not the same thing, but I feel like you're going to end up with a lot of those tranches of customers like that.
So basically what these synthetic cash thing is, the firms that are creating these are then selling those tax credits to the biggest buyer, I guess.
It could be themselves.
Mhm.
And we chatted a little bit about this, but it could be themselves as the bank or financier or whatever, or it could be one of their main partners, because a lot of these loans are sold in open market. So,
Right.
Goldman is a big buyer for a long time from a lot of different loan companies and stuff as
Right.
well. They just sell them in open market. So it could be some of them, it could be somebody else, third party, it could be somebody with an incentive that's like, I have all of this tax relief debt.
Right.
Who wants to buy it from me at whatever rate?
So when they facilitate it that way, obviously they don't pass all the savings on to the customer.
In theory, and that's what they're going to tell you, but
Well, because they're telling you that you're going to give you the 30%.
Yeah,
But
which
what
they're
if-
funding your installer, the
Right.
30%. But you're financing 70% of the loan traditionally, the other 30% going to a third party, of which then that third party financier is paying your installer as well. So
Right.
two financiers paying your installer at PTO. Um, but what gets really weird is they're just depreciating the systems too.
Right.
So they're taking that commercial tax credit, passing it along to you,
And then
and they're,
depreciating it.
well, because they have to hold it though for
5
5 years. They hold it for 5 years, they don't have to pay the IRS back any money because it now qualifies, and then they quietly transfer it over to the homeowner after
Right.
year 5. But
Interesting.
they can take a lot of those same advantages. But the way it works out is crazy because it's like with this synthetic cash thing, it's almost the same thing for a customer doing it on the customer side, but it's a bank doing it on their side, and they're making a 200% return in 12 months because they can take those things like the depreciation, the energy communities, the domestic content, and whatever, which equated to whatever you said, 70-80%,
Right.
but they're only giving 30 away. So they're making double in 12 months by fronting the cash, which
Right.
I think that's a great strategy for them. I mean, they're going to make a killing in a year, and then
Yeah.
all of this is probably going to disappear towards
Right.
the end of this year because that's the end of the commercial tax credit availability.
So in 2026, the real winners are going to be the ones that know how to structure this right. And it's either going to be the third-party ownership companies that structure it right for themselves and allow sales reps to sell a lease version of it,
Yeah.
or homeowners that partner with solar tax professionals that can teach them how to do that for themselves.
Yeah, then there's that third option, which is the synthetic cash and the traditional loan, which a lot of people are kind of chatting about. There's a lot of chatter about
Right.
that. But I think it's easier to say those quick, hey, is it a TPO or is it a synthetic cash?
Right.
Than it is to explain, are you depreciating that system? What do you know about taxes?
Right.
'Cause, like, who knows a lot of stuff about taxes besides CPAs?
Right.
Not a lot of people.
Okay. So if there's a sales rep out there trying to figure out what's the best strategy, right? Do I partner with the company that's got all the options, just one option? You know, what's the best for my average consumer, right? And you know, obviously there's going to be situations where you know, there's no taxable income, a lease makes sense, right?
Yeah.
But if you have a, you know, couple kids, you know, middle income family, and they need the solar because it's going to save them money on their utility bill, but costs have gone up because of the ITC credits going away.
Mm-hmm.
With taking advantage of all these benefits, right? There's a project I know of where similar situation. He got started getting installed, and it was a $200,000 gigantic project, bunch of batteries.
Mm-hmm.
Was going to put the brakes on it until he met with one of those tax partners.
Mm.
And what's 30% of 200,000? 60 grand.
60, yeah.
Okay, so that was his benefit. Believed that was going to go away. After they consulted with them, it went from 60,000 to what? High income earner.
Mm.
They weren't going domestic content. It was just the depreciation was another 60,000. So his $200,000 project now
Wow.
turned into 80,000.
Nice.
Okay,
Wow.
and at that ROI, it was a no-brainer.
Yeah, yeah. God, I wonder what the payoff is on something like that.
Is more
5-6 years or something like that.
No, $2,500 was his utility bill.
Wow.
The 60 kilowatt, 8 battery job was going to result in about $2,000 of that a month going away. So we're at 24,000 a year in savings. 80,000. That's a 3A and a few months
Yeah.
year ROI,
Wow.
right?
And I thought we were seeing it good years ago when people had to see like
It's-
5, 6, 7 year.
Right. And sometimes with these bigger projects, the higher end projects, the incentives, right? It makes it a no-brainer, just like all the other commercial ones,
Yeah.
right? And if you think about why you see these solar farms and big churches and stuff have these projects, it's because of all the incentives, and that part hasn't gone away.
Right.
So
That's existed for a while. And there's probably people that are pivoting towards some commercial solar and batteries and stuff like that right now too. But you mentioned something I wanted to touch on really briefly, which is this making sense for somebody on having solar for their bills and whatnot, but also for, families with young kids and whatever, and, people that have elderly in the house, like having a backup battery too is like really important. And these would all apply to that, right?
yeah, all the incentives is as long as you have the solar with it, right? You have to have that established relationship with the interconnection. I know there's some battery installs where you don't necessarily need the interconnection agreement, and you're not selling anything back to them. But with the VPP programs, it'll work the same. So,
Interesting.
you're going to have revenue come from a relationship with the interconnection. So if they have that program, then you still qualify.
I'm glad you brought that up. I didn't even think about that. The virtual power plant is what he's talking about,
Right.
To where you can sell the energy back when they need it the most, so they don't have
During
to turn
peak
on all these
hours.
peaker plants and stuff like that. Which would still be that interconnection agreement between the two, because even if I have no solar and I'm buying power from
Right.
you, I'm giving it back to you when you need it. So, and I'm making a spread.
Yep.
That's really interesting. Okay, cool. So a couple different options, lots of terminology up in the air. Obviously, these types of things are not your average, everyday type of conversations.
No, and the cool part about most of the firms that help these, they don't do it. We can do the whole thing for you, but they really work well with your existing CPA or whoever is doing your taxes.
Yeah, because they just prep the docs.
Prep all the docs for
Okay.
you. Yeah.
They prep the docs for the client. Installer pays the CPA firm for whatever, and then they just get a complete document.
Yep.
And then
And they're, when you start working with these firms, they're a lot more educated on how all it works. For example, I didn't know you can go back 3 years. So you get some customers that are like, oh, there's too much tax credit. It's going to take me 3 years to get it. Well, if you have them amend your return from the previous years, they can go backwards. And
can they go backwards on depreciation for previously installed systems?
Not the depreciation, because that's a 5-year Mars going forward, right? But the tax credit, if it has to roll over, meaning you have excess,
right.
you can roll it back.
Why couldn't you do depreciation going backwards? Like, be like, oh my God, I forgot to file. Let me hit that and get the.
That's a great question. I don't know the answer.
Okay.
And that's why you have these strategists, because I can pick up the phone call one of the firms and say, hey, what about this? And whether, I'm needing it for my personal information or I'm in front of a customer, most of those firms have that available. So that's what's changing about the industry, is it's becoming more where you need a tax specialist with you when you're doing these projects.
Yeah.
And when you think about it, if you're investing $50,000, $60,000, $100,000 into something, it might not be a bad idea to have a tax strategist with you when you do the project. So.
Right. Yeah, there's a lot of questions that spin up out of this, and I've talked to some really great CPAs in the short amount of time I've been doing this, and man, all that stuff is so open to interpretation. Is how it feels. They're just like, yeah, I'll wait until the next revision comes out. I don't really know. Some of that's fuzzy, and it's like we were talking about that a lot when all this stuff was changing so quick with Big Beautiful Bill, residential tax credit ending, and all of this stuff. We're like, but batteries? And they're like, no.
Maybe.
Maybe we're not sure. And then we're like, so are we selling them right now or no? They're like, okay, no, actually, that came out. Okay, great. But it comes out so much later and like staggered. And then they kind of go back. They're like, no, everybody that was doing this, you're not supposed to do that. So
sometimes that creates a little bit of uncertainty. One of the things I point out is that when you do use most of those firms, they have an audit guarantee.
Okay.
Right. So, if something changes and they get audited, the firm takes care of that.
Nice. Okay. Yeah, as long as they pass the audit.
Yeah.
That's all that matters.
And they have, because they've been around for 5-6 years. They can show case studies of customer got audited. They looked at exactly what they did, gave them a thumbs up, moved on.
Yeah.
Right. So
I'm sure there's a few of these types of places too.
Yeah, there's a
CPA
couple
firms that do that.
And then there's some firms that do it. There's customers that realize when you explain to them, they know their CPA knows how to do it.
Right.
Even I think there's an installer that I've heard of that has an in-house CPA.
Nice.
And so they just have that guy do it. You know what I mean? So it just depends. But again, if the customer's not educated about that as an option, they're thinking they missed the boat, right?
Yeah.
And it's too late.
Yeah.
So
like a lot of people.
Yeah.
Seeing a lot of people exit the industry right now because of that too.
Yeah, and you have some people that have they had every intentions of leaving in December. Met with one of these firms, figured out how that works, and they're right back at it.
Yep.
So,
God, the amount of times I've heard like, I think I'm done.
right.
It's like, man, I'm jazzed up,
Yeah.
man. Like, there's no competition out there anymore.
Yep. There's always going to be, an opportunity in the solar, even if all those benefits were taken away.
Yeah.
Right. There's a need for it. Right.
There is. Yeah, it's still good. It's still like I produce my own energy in my house. I have something back up if something goes down. Shit, my power went out a week ago.
Right.
And I was like, are you serious? It's like the middle of the day. It was, I don't know, for 5-6 hours in the middle of the city. It was just me and like 800 other people near me.
Yeah.
I had a battery, so I was a little spoiled.
Well, I hear a lot about AI coming on and what it takes to power AI.
A lot.
And it's going to make who's going to pay for it?
Us somehow, in
The
some way.
consumer, right? With electricity bills, as those data centers and all that stuff gets built, it's going to demand a lot of energy, which is going to mean they're going to have to keep upgrading all the systems, which is just going to keep that thing going skyrocketing. So,
good for utilities.
These options are going to have to be, the best bet for the customers.
Yeah. There needs to be more power on the grid anyway. I mean, pretty much in every country right now for the most part.
Good.
So, okay, so you've got a few different options. You've got some stuff. Some of it's a little opaque and vague. So,
electricity is not an option.
That is also true.
So you have to have that, right? And how you're going to get it, it's going to be determined. You're going to pay more for it, or you're going to pay less, right? Yeah. Solar is becoming the least expensive option.
How so?
Because of all the tax benefits and doing it the right way. If you keep just staying on the grid, right, and subject to the increases, the bills are going to get out of control, right? And I mean, that's why the industry, I believe, survives, because you have a lot of consumers out there where, if you look at the statistics on bankruptcies, it's a couple $100 a month would have prevented it. Meaning they're on a fixed income and this, that, or the other thing happens, and all of a sudden they're behind and they can't get out, and a couple $100 would have fixed that, right? So anywhere you can save money, right, you're going to need to start exploring that, and solar is one of the great ways to do that.
Yeah, and there's a lot of different, I think, people and a lot of different categories of folks that would like something like that, of course. But mind you, we might be a little bit biased in that category.
Yeah, maybe.
Just a tad, as we have all of the experiments on our own houses as well, and do this for a living. But either way, I mean, I still think, like, if everything went out, I'd want my stuff to stay up. It's hot here in Arizona, so I don't want to be in the middle of summer and have my power go out and whatever. It's like, we got 2 electric cars in my house. Like,
me too.
Man, if our power goes out, we're not driving.
Right. How are you gonna get out of town?
Right. You're not. So, how long can you shelter in place and do some stuff like that too? And I think that's where this whole other piece of that comes into play, is like resiliency of your home and the grid and whatever. And it has to make financial sense too, because people have to be able to afford it. And so being able to take loans out on this type of stuff and pay monthly for it makes it a lot more attainable.
For the average person,
yeah. For 90% of them, minus the couple affluent people that pay cash.
When it comes to home improvement type loans, right, it's still the most attractive product out there. Whether you got a roof that you need to finance, or AC, or any home improvement project, those are all shorter term loans that are not very attractive, no tax benefits.
Right.
So on that alone part, of being able to consolidate all those into one loan and make it a little bit more attractive is always going to be there.
Yeah, and they've got that with like ACs and heat pumps and stuff like that, or there used to be credits for that type of stuff too. So lots of different options. So,
and local utilities here, I know they're adapting, right? They know the need for batteries, so they're starting to give incentives on top of their regular net billing. You know what I mean? Like SRP is doing an incentive on top of that to encourage batteries. Right?
They had it in the beginning too. I caught the end of that first one with SRP, where they're like giving away cash for batteries and installing that.
I think that'll come back.
I hope so, because that'd be cool. But distributed energy resource stuff for batteries. I mean, virtual power plant. That's one thing that's been happening a lot. So super neat, but I'm also a techie type of person, likes to play with all that stuff. So
Speaking of techie,
yeah.
Talk about some of our sponsors.
Yeah. Let's use this little break to talk about a couple people that help us make this possible. One of them is Telefy. Get names, phone numbers, and addresses by simply drawing on a map. The algorithm finds the most relevant contact records by searching multiple data sources in real time to deliver your assets in milliseconds. 25 cents a contact, volume pricing, and no monthly commitments. Visit telefy.app, that's TELEFI.app for more information. And our second sponsor, which is Enphase. We like Enphase. They have some cool new products out right now. The Enphase energy system brings solar, batteries, and software together in one complete package. So now you can make, use, save, and sell your own power all through a smart mobile app. Visit enphase.com for more information.
All right. Well, thanks for listening to this week's episode. If you want to leave some feedback, if you are a CPA or a tax professional and you have some issues with anything that we covered today, please leave in the comments your concerns. We'd like to hear what your thoughts are on it. I mean, we've talked to Harvard professionals that do this for a living, and this is what they've told us. So we're curious what you have to say about it. And then with that, I guess we'll chat next time.
Yeah, that was a nice way of John just saying, like, I want you to show us how you're wrong in the comments.
Right.
So, and like, we'll rage bait you a little bit to get you to reply and comment on our stuff.
Yeah.
But honestly, if we talk about this type of stuff, it makes us all better as a community, and you get to share tips and resources and be like, oh, you know what? Yeah, that guy is right. He random dude on the internet number 3. So
Yeah. And absolutely make sure you consult with your tax professional before doing any of this.
absolutely. We are not tax professionals, final disclosure. So thank you so much for listening to Solar Sales Podcast. We'll be back again within a week
Yep.
to give you another episode on a few different things. But thanks for tuning in.